For the longest time, if you asked anyone where the safest place in the world to invest your money was, the answer was always the same: the US markets. And that reputation, it was built on two solid pillars: courts you could rely on and a really vigilant regulator, the SEC. It was like a magnet for capital from all over the globe. But here's the big question we're tackling today. Is that still true? Is that rock-solid reputation still deserved? Because the ground is seriously shifting, and the very foundation that made American markets feel so secure is changing in ways that, frankly, most investors haven't even noticed yet.
All right, to really get this, we need to talk about a key concept: the regulatory perimeter. Just imagine a brightly lit circle of safety. Everything inside that circle, all the companies, all the transactions, is directly watched over by the SEC. They've got strict rules and have to tell you what's going on. But outside that circle, well, that's a vast and growing space where that direct oversight just isn't there.
So just how big is this outside area we're talking about? Get this. Projections show that by 2025, a staggering 67%, that's two-thirds of all U.S. capital market activity, is going to be happening outside the SEC's direct line of sight. The safe, well-lit area is no longer the rule. It's quickly becoming the exception.
And this chart, wow, it really lays it all out. This is the tectonic shift we're talking about. The first bar shows the regulated market, slow and steady growth. But look at that second bar. That's the unregulated side of things, and it is just exploding. You can see that crucial crossover point right after 2020, where the fringe activity started its sprint to become the new mainstream.
So what's going on here? Why is all this money moving out of the public eye and into the shadows, so to speak? The source material we're looking at points to three really powerful drivers that are pulling capital outside of that regulatory perimeter. First off, the private markets are just booming. Private equity and credit funds, they're managing trillions of dollars now. They prefer flexibility in private deals over the kind of transparency you have to have in public markets. Second, a lot more companies are just deciding to list on foreign stock exchanges, where the rules are a bit lighter. And third, let's be honest, the cost and the legal headache of being a public company in the US is just pushing more and more companies to stay private for way longer, sometimes forever. Okay, so markets are getting murkier. You might be thinking, this sounds like a US problem. Why does it matter to me? Well, to understand the global stakes, let's just take a look at what's happening in Australia. Their situation is a perfect example of why this matters to everyone. Australian retirement funds, they're called superannuation funds, are sitting on more than 3.7 trillion Australian dollars. And a massive chunk of that money, we're talking about people's actual retirement savings, is invested directly in US markets, both the public ones and the private ones. They are hugely exposed to this shift. So what does this mean for them, practically speaking? Well, for one, their safety net is getting weaker. Instead of relying on the standard public SEC disclosures everyone can see, they now have to depend on these super complex, private legal contracts to protect their money. And second, that gold standard for corporate governance that the US used to set for the whole world, it's starting to erode because fewer and fewer companies are actually playing by those tough rules. And this right here, this brings us to the absolute heart of the issue. It's the fundamental difference between having rules in place to prevent problems from ever happening versus just relying on the courts to clean up the mess after everything's already gone wrong. So let's break this down. On one side, you've got what's called ex-ante regulation. Think of these as the rules before things go wrong. This is the SEC's job. It's preventive, it's about real-time information for everybody. On the other side, you've got ex-post enforcement. That's the court system. They come in after the damage is done. It's reactive, it's slow, it's incredibly expensive, and honestly, it's not a very consistent deterrent. You can't just replace strong rules with lawsuits. And the result of this shift, from proactive rules to reactive lawsuits, is a market that's just fundamentally riskier. It's more opaque, which means it's way harder to see what's actually going on under the hood. It's more volatile, so you get these wilder price swings. And maybe worst of all, massive risks can build up completely in the dark, where no one can see them, until one day, it's just too late. But look, this isn't just an American story. As the US model changes and becomes more fragmented, what we're actually seeing is a whole new global map of investor protection and trust starting to take shape. This table breaks it down really nicely. You see the US approach, where the perimeter is shrinking bit by bit through all these different exemptions. Then you have Australia, which draws a much clearer, bright line based on how much money or income an investor has. And then there's the EU, which is trying to create one consistent set of rules for everyone. The big geopolitical question is, as the US model gets weaker? Which of these other models is going to become the new global standard?
So when you boil it all down, the choice that investors and regulators are facing is pretty stark. You can either just ignore this whole trend and accept that markets are going to be more volatile and more dangerous, or you can adapt right now to a completely new world where the old rules and benchmarks just don't apply anymore. Which leaves us with the final and maybe the most important question of all. For decades, the easy answer to who do you trust with your money was the US market. But as that system changes, as the lights of regulations start to dim over more and more of the financial world, investors everywhere are being forced to ask themselves a much harder question. In a world of fragmented rules, who can you really trust?